Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without... Be quiet, man. Shout out to Gang. Sitting up there watching that stuff in silence because I wasn't sharing the screen over there. And I wasn't sharing the sound. They just sitting there looking at it in silence. Good morning, everybody. Thank you for tuning in. When I'm always looking at funny stuff on the internet, and I just saw that Michael is live on YouTube. So let's go over there and see what he is talking about. He learned Shell said YouTube is the preferred group. Let's go over there to the tube and see what Michael is talking about. Has anybody been watching him? What is he talking about? Has anybody been watching him? Let me come here. I just be hitting stuff while I'm sharing my screen, and sometimes stuff be mess around it. Let me see. It's showing that he's live. Yeah, there it is, right there, live.
And know that you're going to be a part of it, and not be afraid that you're going to miss the move. So you want consistency, continuity, but you're also not going to over leverage and over trade. That means use the smallest amount of leverage, 1 micro. You're not looking to make millions of dollars on one trade. You don't care if you get stopped out. In fact, we're going under the premise that you got stopped out overnight in the London session. Now you're using it again. Notice that we're using the high of the volume imbalance on the daily chart.
Is that
it's
coming
the
through my mic?
PD array. It trades to the high of it, and does it hold that candlestick? Because it opened here and went all the way up here. At one point, there was a big trades to the high of it, and does it hold that candlestick? It comes down here and closes. Where does it close? Below.
I'm trying to figure out why I see my mic jumping.
Here. So now the immediate next candle, anywhere below that midpoint, that consequent encroachment, anywhere in there, but above.
Oh, he teaching
of the candlestick's high, which is the.
Let me see what he's talking about.
Let's go.
He teaching.
Second, real quick.
Go
back and look at old price data and see the benefit.
Your sister's on the go.
Oh, shit.
Yes.
Gage.
Because we don't have the wick to the immediate left.
What?
This is a valid premium.
Oh, she's just on the phone.
So it would be viewed like this.
She right here. She right here with me. She from the go. I say she broke my phone.
Oh, she broke your phone. Hold on.
Knocked it clean out my hand.
Let's just make it a little bit darker.
Hold on, let me pause that.
But she from the go though.
Hold on, let me I'm trying to find my Zoom. Oh, okay, there it is.
Jeff, you gotta say, love you too. Your sister say she love you.
Love you, Geach.
I want that you stand with me.
Alright. Go ahead and mute, Lump. Okay. All right.
And then
Let me see what he talk about.
so right
he
away
he
we have
teaching.
form. It means it's a myth. Okay. So here creates a run there, and then drops down into this.
All right. Before I do this right here, do y'all want to just tape read, or do y'all want to see what Micah talk about? Before I do this, what y'all want to do?
I'd rather tape read because I can always go back and see what he was talking about.
All right, we got a tape read. I get tired of the whatever you want. I get tired of the whatever you.
I'm with Jim. I'd rather tape read.
Somebody said Tim University. All right, ain't nobody talking, so we just gonna go to the tape reading. Get out of here, Michael. All right. Okay. Me was watching price last night with you all, and we see our range that we were talking about. You see that we did go back to the opposite side. We see that it was a very high resistance liquidity run. Remember we talked about knowing your invalidation points. If you did happen to get into a trade, knowing your invalidation points, right? Knowing how far can price actually come back and not invalidate the trade. Okay. Let's look at that real quick before we move into the day, right? Remember that this was our opening range, right? That was our opening range there, coming into the 6 o'clock time frame, right? That was the highest high, lowest low in that first 30 minutes. And we see that price had came down and we poked below that. It was, I think it was one tick below that while we were watching the price, whatever. And then we started to make our way back up. We see it was high resistance, and you see that we were stair stepping up the quadrants. Well, these are eights, right? Came all the way back down, right? See how we were stair stepping up them. Then we came very close up here a couple times, making a high. But once we came and made these relative equal highs, look what price did, right? We traded back down, okay, to that 8th level, right? Drop down below the closing price of the order block, but both times on this candle and that candle, we respected that order block. All right, so we had a deep retracement back down, okay, and that was in the 10 o'clock hour, right? We went into a new hour, right? This is the 10 o'clock 15-minute candle, and we manipulated, right? So going into something new, we manipulated, went down, right? Going against the short-term order flow here, right? And then we finally took that high, right? Once we took the high, right, we came up into that fair value gap. And then once we took that high, right, we came all the way back down, right, and swept out this internal liquidity right there, left that one, and then we went up, right, and looked like we took that high. I don't know if we took the high, if we traded to it. Let's see. All right, so that's 99 even, and that high right there is 98.75, so one tick away, right? So we did not take that high, traded up relative equal highs, and then we dropped down, right, all the way down, and took out that liquidity that was left, right? Then we traded back up to that high right there, right, into that wick. Didn't make it to the fair value gap, because wicks are gaps too. Fair value gap, wick, right? We traded up into that wick right there, right? Traded down, back outside of that range, right? Traded back up, dropped down, and took out the daily low. And what have we done with that daily low? Remember we said, right, when did we say that this short-term buy program was invalidated? Once we take out that low, right? So we have extended this bearish range, right? We've extended this bearish dealing range because we came down and took out that low, right? So this short-term buy program was staying intact all through overnight, right? We engaged the sell side, we engaged the buy side, created relative equal highs, and then we moved away. Okay, now we've taken out the daily low, and we're here at this. What is, I think that was like an hour. Was that an hourly? Yeah, that was an hourly SIBI right there. It was an hourly inversion fair value gap we was watching. Right, so now we're at that hourly inversion fair value gap there. So what are we doing? We're watching to see how do price treat this on the hourly basis, right? That's an hourly fair value gap there. All right, we didn't even go up to the higher time frame yet. We just jumped right into what was going on. Okay, so looking at price on the daily time frame. All right, let's go back to the beginning of the week so we can see what's been going on all week. Right, we want to get our mind together. This is the last day of the week. Oh yes, don't force it Friday. That's what we call it around here. Don't force it Friday. Monday, Tuesday, Wednesday, Thursday. Okay, don't force it Friday. These are all the gaps throughout the week. All right, those are all our gaps throughout the week. All right, so we open here. Right, this is where we opened at on Monday. Monday we dropped down, boom. All right, took out Friday's low. Tuesday, right, we left Monday's low, took out Monday's high. Wednesday we expanded up, boom, took out the buy side liquidity. Thursday we gave all of that back, traded back down into the order block. Right, closed, respecting the order block. Then today, right, we opened up, traded up, and then now we're dropping. Okay, now we're dropping. So right now the order flow is bearish. It's been bearish ever since Thursday. Right, Wednesday we're going up. Thursday we created a bearish dealing range, and then now today we're continuing that bearish dealing range. All right, do we have to keep dropping? No. Do we have to rally? No. We just go in there and we watch the order flow. We understand what's going on right now. The order flow is respecting bearish PD arrays. The order flow is bearish right now. All right, so that's what we got to go off of. The order flow is bearish. It's showing bearish order flow. All right, if it decides it wants to stop and start respecting bullish order flow, then we have to respect bullish order flow. But right now, bearish order flow. All right, 60-minute time frame. Okay, now we have liquidity here. Right, we got liquidity there and liquidity there. Right, relative equal lows. This is the lowest low right here. So I personally like to look at the lowest low when we have relative equal lows. Right, I think that's a daily low. Yes, that is a daily low. Right, and that's a daily low also. So what I'll do, I'll mark 1 as the sell side, and I'll mark 1 as a prior day low. All right, go back to the 60-minute time frame. Okay, right, because we all know the foolery that sometimes price like to do is come down and get very close to the liquidity and turn around on us. Okay, so we're just watching that. All right, now coming up above this high right here, right, completed this smaller market maker buy model. Okay. Now, for being on the right side of a market maker buy model from here, right, that market maker buy model completes up here. All right. That market maker buy model completes up there. All right. This smaller one that's on the inside, we just completed that market maker buy model there. Okay. So understand, we can come down and take out this liquidity, right, and still not invalidate this market maker buy model. All right. That right there would just be a second stage reaccumulation, right? Something like that, right? Come down, right? Come back up, come down again, right? Without invalidating this market maker buy model here, okay? But like I said, right now, price is in bearish order flow. All right. Now let me turn off all these other, they opening gaps. Just leave on today's. Again, the purple one is where we opened up on the week. So we're right now, right? We're below the weekly open right now. We're down here below the weekly open. Don't need these anymore. Y'all hold on for 1 second.
I'm the only one who can't hear you.
Y'all can hear me now?
Yep, coming through.
All right. How long y'all was gonna let me talk without said before y'all said, Tim, you muted? Y'all got me out here just running my mouth. And all I heard was, am I the only one that can't hear him? I'm like, wait, what? I've been talking for like 5 minutes. This is the overall dealing range that we're in right now. This the highest high. This is the lowest low of the bearish dealing range that price is respecting right now. We're respecting bearish order flow inside this dealing range right here. Right? What do we look at inside the dealing range that we're in? We look at the latest expansion leg of that dealing range. This is the latest expansion leg of that dealing range. This is the highest high and the lowest low of that latest expansion leg, right? So you look at where are we in price in the dealing range? We're in a discount. Where are we in price on the expansion leg? We're in a discount, right? Can price keep running off to the sell side? Yes, it can, right? But we don't chase price, all right? We don't chase price. Every trade is not our trade, all right? If price just wants to keep running off to the sell side at 9:30 without us, we just sit there and we watch it go. We watch it go. See ya. Bye-bye. All right, we watch it go. Okay. We have our midnight open up there. All right, so not only are we in a discount on the dealing range, not only are we in a discount on the latest expansion leg, we're in a discount on the day. All right, Tim, why do you keep stressing that? Because price is bearish and we're in a discount all across the board. Right? You're selling the premium, you buy in a discount. All right. Let's adjust our overall previous day dealing range. This is our previous day dealing range, and we've extended it out, right? Market from the highest high, lowest low of the day, and we've extended that range out. So now I'm not showing the 1 and the 0, but I'll put that on, right? So now that's our range that we've extended out. Okay. Now this is our latest expansion leg. And we see here that right now, where price is now, equilibrium for the latest expansion leg lines up with the lower quadrant of the overall range. Okay. Let's go down. This is a 15-minute chart. All right, so on the 15-minute chart, now you could fractalize everything, right? You could fractalize everything, and we say, okay, looking at our, let me get this together. Okay, I'm gonna get this out of the way. Don't need that no more. All right, so we could fractalize everything. Looking at what price has done, right? This is where we opened up last night. Okay, so as we opened up last night, we come here, trade up, we set these relative equal highs. Okay, and let's look at it in the respects of ranges. Let's see, we're gonna put London and we'll put Asian, right? So from it's from 6 to 12. Let's put this. We'll go from 7 to 12 for that, and then for the London, we'll go from 130 to 5. That's cool, right? Looking at like the kill zones. Okay, we're looking at the kill zones, right? So in the Asian, we pretty much consolidated, right? Consolidated in the Asian. So going into the London kill zone, right after midnight, right? We traded up, we dropped down there, right after midnight. We had that little range there. Then going into the London, we traded up, took out the buy side, right? Went up, created that relative equal high. Then we broke down, took out the sell side, right? Gave us a bearish Judas swing, right? After creating that range after midnight, we got us a bearish Judas swing going into the London. And then after that bearish Judas swing, right, we traded back up. We talked about, we came up into that wick. We talked about that earlier. Came up into that wick, broke down, right, traded back up into the imbalance, right, into the bearish order block, broke back down, traded back up into the imbalance, broke back down. So this right here is the only portion where we haven't had a retracement yet on this 15-minute time frame. Okay, right? We haven't had a retracement back up yet on this 15. We expanded, right? Retrace, expanded, retrace, expanded, retrace, expanded here. This is the only range there after leaving all of this that we didn't have a retracement yet. All right, so for the lower time frame, right, we could watch this and we see here we just came back to equilibrium there. We have a 15-minute fair value gap right there resting in the premium. All right, the market is already open. Okay, we can hide this now, right? So for the lower time frame, right, we can watch this area here. I'll hide this for a second. This right here closes at what's the close on that? 80.25, and then the open on this right here is 81.25. So no gap there and no gap there. All right, this right here was our overall. That's our latest expansion over there. And this right here for our overall expansion, that's your fair value gap that's in the premium of the move for the overall expansion. And this is your fair value gap that's in the premium for the move that hasn't had a retracement yet. All right, we didn't get our pre-market high and low. All right, looking at our pre-market high. Buy side liquidity pre-market. This is way back over here. What in the world is going on over here? I got a whole lot of stuff. Oh, I'm deleting it. Nice reaction off of that thus far. While I'm deleting this, And then 9:30. Where's 9:30 at? 9:30. So 9:30 open down there. Okay, so I didn't put my sell side on the pre-market. It's our pre-market sell side right now. Okay, so 9:30 we opened up, took out buy side, right? Going into a new session, right? We take off to the upside, take out buy side. We watching to see, is this a fake move? Are we going to form a Judas swing? All right, we've traded up into the 15-minute PD array that we identified based off the 15-minute time frame. This was a premium PD array based off the 15-minute time frame. All right, the premium PD array based off the higher overall move is above 24,946 and a quarter. All right, so 9:30 we got to blast up into the short-term buy side. The pre-market buy side is all the way up there. All right, hit the anticipatory reactionary point, having a nice reaction off it thus far. Right, we got this. We're looking at this fair value gap right here. Right, there is a wick over here, but we're looking at the fair value gap in this case right there because we got some little price action in between them. You know what I'm saying? Got some price action in between them. So we're watching the fair value gap in this case, right? We've come down, we've closed below consequent encroachment of the fair value gap, showing weakness of the fair value gap, right? Fair value gap hasn't been invalidated, but it's showing weakness. So we got a 1 minute fair value gap showing weakness against a 15-minute bearish fair value gap showing strength. Right, so now in this case we're watching these down close candles here, right, to see if they start resisting price or if they start supporting price. Okay, because in bullish order flow, down close candles should support price and send it back up, right? So now we're up against this 15-minute time frame, and the 1 minute is showing weakness. We're closing below consequent encroachment. Okay, but you want to see, do we, because coming here in this short time frame on the 1 minute, right, we are forming a buy program on the 1 minute, right? And so we're watching our higher time frame PD arrays to see how does price react to these, right? Is this 1 minute time frame steadily respecting bullish order flow, or is it yielding to the bearish order flow? All right, so watching the down close candles, right, they're showing support of price. Okay, if we come here, right, we got our down close candles there. We see here All right, put it there. This candle closed above consequent encroachment of the order block. This candle closed above consequent encroachment of the order block. Right, now we've traded back down into it again. All right, we're watching the see, and we're still fighting with the higher time frame PD rate. Right, what are we looking for on this right here? How does the 15-minute close in relations to that PD rate? Right, this is where we get caught up a lot of times, where we say, oh, look, we're disrespecting this, right? But this is just a 1 minute chart, right? We still got 4 minutes left on this candle here, this 15-minute candle here. How are we closing in respect to that on the 15-minute time frame? Okay, in fact, let's just put this over here so we can see it at the same time. All right, 5 minute right here, right? I got too much going on with these doggone fib tools. All right. Okay, 5 minute, we're trading back down into, we have a BISI down here, trading down to that wick there. We have a 5 minute BISI right there. All right, 1 minute, still fighting with that 15-minute PD array. That 1 minute, now we just closed back below consequent, mean threshold of that order block. So now this order block is not supporting price right now. We just closed back below the order block. The order block is showing weakness. All right, the 5 minute fair value gap is there. Okay, 5 minute fair value gap is there. All right, so now we've gone from a 15-minute PD array, traded back down into a 5 minute discount PD array. All right, so now we're watching. Right now the 5 minute, you got to wait to see, does the 5 minute PD rate does its job, or do we just blow through it? Right, so we got 2 minutes left on this 5 minute candle, right, and we're just pushing through right now, not showing no kind of respect. All right, we got a order block there on the 5 minute, and then now if we trade back down below, now we have a bearish Judy swing. Right, we just traded back below the lowest point of 930. Right, we went up, took out buy side, hit the 15-minute PD array that we talked about. Price came back down below the lowest price. We got a bearish Judy swing that played out thus far. So now price is showing that it's still respecting bearish order flow. That bearish Judy swing goes in line with what we said coming in. Price was respecting bearish order flow. All right, there's the pre-market sell side, was just taken out. All right, now overall we're still in a deep discount. Right, if you're looking at it from a higher time frame, you're still in a deep discount, and you're not trying to sell in a discount. Now what do? We fractalize price, and we pointed out an area where you could be looking to sell with measurable risk. Right, you could be looking to sell with measurable risk. That's what we did. We came down to the 15-minute time frame and said, this is the area, yada yada yada. Right, but from a higher time frame standpoint, we're still in a deep discount, and you're not trying to sell in a discount. Right, do everybody understand what I'm saying? All right, I see here Learner Chef said I typed it. Can I hear your typing? Can I hear your typing? All right, so 9:45, the 15-minute candle has closed. Right, 15-minute close. Right, showing a healthy respect of that 15-minute fair value gap. Now we have this huge wick right here, right? This is a premium PD array that you watch. We've swept pre-market sell side. So now let the algorithm establish a range, wait for it to engage with one side of the liquidity, and then look for signatures of what it wants to do, right? The pre-market range was established. We've engaged the sell side. Okay, so now that we've engaged the sell side, what can you be watching for? Okay, at 9:30, we have got a bearish Judas swing. The bearish Judas swing went into the pre-market sell side, then we rejected it. Now you could be watching this bearish Judas swing to see if we get a wig snatcher and a possibility of maybe going back toward the pre-market buy side, right? Will that invalidate the sell program? No, it will not, because we've extended the sell program, right? Then that would give us a reason to manipulate buy side, right? And to continue down, right? That wouldn't be seek and destroy, right? Because a lot of times people get mixed up. Oh, it's seek and destroy, because we'll go to sell side, go to buy side, not understanding the narrative of what was put in place first. We extended our range, right? And once we extended our range, only thing we did was come back and manipulate more liquidity to extend the range even more. Okay, so now that's a wig snatcher, right? We went up to buy side, down, engaged with the pre-market low, came back up to the buy side again immediately. So now we want to see this area support price. We got that. This is the first one off displacement, right? This is the first fair value gap off displacement, right? This was the first one that was created. Okay, so I like to watch the one created off displacement, right? That's the fair value gap, right? Keeping in mind, this is the first one that was created after the turtle soup. Okay, so after the turtle soup, this is the first one that was created, right? This is the first one off displacement. Right now, price is trading into the one after the turtle soup, right? We're looking, and it's at the previous day low, right? So we're watching. We want to see this area support price because we got a wig snatcher, right? We want to see it support price because we got a wig snatcher. But bear in mind, the 15-minute is still fighting against that fair value gap. All right, this is how you go in there and you understand measurable risk. It's certain things you're looking for. Hey, I'm demanding for price to respect these things because of what the algorithm has done, right? Right, so we're reacting off the first SIBI here, created after the turtle soup. All right, nice reaction off the first SIBI created after the turtle soup. Nice little pop there. That quadrant there, remember that quadrant there was, I think that was equilibrium for the overall range, and then that buy side would be in the premium. I think that was equilibrium for the overall, was it? Let me go back here. I can't remember. Yes, it was equilibrium for the overall range. Yeah, that quadrant level. We talked about that earlier. right? Equilibrium for the overall range, right? We have some buy side right there going into that equilibrium. So that right there, we'll call that's going to be internal buy side. That's going to be the buy side from pre-market, right? We engaged pre-market low, right? Got a wig snatcher. So now we're looking for price to draw towards pre-market high, right? And that first fair value gap after the turtle soup supported price pushed us up, create relative equal highs. Now the 5 minute, we've traded back down into the order block there, right? We have an inversion fair value gap here on the 5 minute that we just traded back down into, right? You want to demand at that supports price, which it's doing right now, right here, right? You want to demand at that supports price to continue to push us up towards the buy side. Do we have to get there? No, we ain't got to get there, but it would be nice to get there and sweep that, right? Mind you, we have an inversion fair value gap up there that's in front of that, and we got the first SIBI right there that was created after we came up. So we have this balanced price range right there that's in between us and the buy side also. All right, we got 8 minutes left on this 15-minute candle, looking at how it closes in respect to that SIBI, right? Now that SIBI on the higher time frame is in the discount. So for the higher time frame narrative, if you're trading off of that, you'll be demanding that that gets disrespected to bring you back up into a premium, right? You'll be demanding for that to become an inversion if need be, to push you higher to get back up into a premium of your dealing range, right? If the algorithm is done with that area there and doesn't want to trade back up, it's just one of the things like, hey, I missed the move based off of my time frame that I'm watching, and I'm not going to chase it and sell in a deep discount. It'll just have to go without me, right? It's all about what time frame are you watching, what's the narrative of the time frames that you're watching, what's the order flow of the time frames that you're watching, you know, and understand keeping it within the scope of that time frame. Because and like we said last night, understanding your invalidation points, because as you see, the market has been very volatile over weeks and days and months, and we have these nice pops and moves off of the PD arrays that we're watching on the lower time frames, but we're in these high resistance liquidity run conditions where price will run in our direction, then come all the way back, then run in our direction, then come all the way back. We saw that last night, right? As we talked about price last night. And that's why I kept stressing, understand what your invalidation points are if you got into a trade. Because when we first started out, I said, because price, the way price engaged with liquidity, this will be a time where I'm like, I'm just going to sit this out. And as we see how price played out throughout the throughout the Asian, all we did, it was a very high resistance liquidity run situation in the Asian, right? So you want to learn to identify, hey, based off of the optimal trading conditions, price has not given me those signatures. So do I want to really engage right now? All right. And then once you decide I do not want to engage, no matter what happens, it is what it is, right? We can't FOMO, we can't regret, we can't do all of that, right? I'm kind of tired of talking. Anybody got anything for me? Anybody got anything for me?
Hey Tim, the one thing that I keep missing, my time is just bad, man. Every time you talk about this, I jump in the middle, and that's how you set that opening range pre-market.
What you mean? How you set the opening
Like
range pre-market?
the when you start watching pre-market, you wait for price to set a high and a low for the session.
Oh yeah, yeah.
Uh,
Okay, so pre-market, when you set in the range for pre-market, you start at 7 o'clock, right?
okay.
So let's clear all this off, hide all this. All right. So what you want to do? Let's I'm just gonna go to 15-minute time frame since we already at after 9:30. So what you want to do for getting ready to trade the New York session, right? This is if you got a bias, if you don't got a bias, if you know what the order flow is, if you don't know what the order flow is, what you want to do, you want to start at 7 o'clock in the morning, right? You want to start at 7 o'clock in the morning, and if you're skilled enough to understand what's happening with price prior to 7, that's just an added bonus, right? Because you know how to look at the price, you know how to look at the price and you know what I'm saying, determine where we are in price and kind of help you with your trading decisions. But even if you don't know that, you want to start at 7 o'clock in the morning, right? And you want to identify the highest high, right, and the lowest low from 7 o'clock to 9:30, right? And that's if you just coming in trading at 9:30, right? You want to identify the highest high and lowest low from 7 o'clock to 9:30. This is our 9:30 counter there, so it would be that low right there, right? So now that's your range based off the pre-market. Okay, so now that your pre-market range is set, okay, if you don't have no bias at all, once 9:30 drops, what you want to do is, right, this is our 9:30 open. Once 9:30 drops, right, that's our 9:30 open, you want to wait for price to engage with one side of the liquidity, right? And why? Oh, it's already there. All right. You want to wait for price to engage with one side of the liquidity. And once price engages with one side of the liquidity, then you're watching for signatures to say, okay, are we going to continue, in this case, lower, or are we going to go back to the opposing side of that range, right?
Yep.
And so many times, right, I don't have a percentage for you, but many times once we engage one side of the liquidity, the algorithm will often, okay, blow my ears away. So many times it'll go to the opposing side, right? Shout out to nephew Tremaine. He called it the I think he called it the ATM model. He called it the New York ATM model, where it like you look for, once you sweep the liquidity and then you just target the opposite side. That's what he called it. He called it the ATM model. But that's just a common thing that the algorithm would do. Wait for it to engage one side of the liquidity and go to the opposite. And that's and this is based off a specific time frame. But you notice that's the same thing we do with anything, right? We wait for it to engage the liquidity and look for the signatures. Does it want to go to the opposing side? You don't always have to get there. That's why we have points where you can trim, you know what I'm saying, scale out, right? And then we always want to know our invalidation points, just like we talked about last night. What are your invalidation points for, like here, we came down, we swept this liquidity, right? And we came up, right? and now we've created relative equal highs. What's the invalidation point of this buy program if we extend this down, right? So price can come all the way back down to that order block, drop all the way back down to 930 open, drop all the way back down into that rejection block, and still not invalidate the buy program that's been set up in the short term right here, based off this wig snatcher that we got at 930. Okay. And right now, as you see, we're just in very high resistance conditions. All right. And we're still trading inside of that. When we pointed out that 15-minute discount PD rate based off the 15-minute time frame, right? We're still trading inside of that area, right? So this 15-minute candle has closed respecting that again, right? We're showing weakness of it because we pushed all the way through it there. We pushed all the way through it there, but we're still closing respecting it. These wicks are doing a lot of damage, right? But we're, you know what I'm saying, it's showing weakness of it. We still haven't created an inversion, right? Again, from the overall time frame, this is in the discount of that range. So you will want to see this fail to get you back to a premium of your overall range, right? And where's the liquidity in the premium of that overall range? Right there. So the opposing side of this is a good candidate to manipulate buy side if price wants to continue lower. Make sense?
Yeah, I got you. That does make sense. Yeah.
All right. 10 o'clock. Anybody else got anything? Anybody else got anything? Gang. If y'all want to watch what Michael was talking about, I'm about to watch it now. So if y'all want to watch it, I'll pull up in the Discord and do a watch party. If y'all want to see what he was talking about, for those who want to see what he was talking about, pull up. We'll do a watch party. Yeah. Again, I appreciate y'all for hanging out with me for the month of February. I feel like this was a productive series. Got a little bit of feedback last night. People was talking about it was productive for them also. I just lost my train of thought. I'm sorry, y'all. I lost my train of thought. Well, that brings us to the end of Facilitation February. Do me a favor, hit a like for the algorithm. If you're not subscribed to the channel, please subscribe. Before I go, got a question for y'all. Be honest with me. If you be sneaking and taking trades while I'm talking about price action, put a 1 in the chat. Put a 1 in the chat. I know you're sneaking and taking trades while we be talking.
Don't do it, y'all. Don't do it. If you want to keep sneaking, don't do it. Man, we don't care nothing about no Michael, man. We tuned in to see you, man. We don't care nothing about no Michael Holderson. We appreciate the concepts. But we tuning into Aranya Grande. That's his big spider, if you know hablo español.
Okay, then. Okay, then.
You can dig it.
Okay, then. Sharoni, get your daddy, Sharoni. Get your daddy.
Right here. She right here, ready to go.
All right, man. Yeah, man. This was fun. This is the end of Facilitation February. If you got something out of it, hey, I done did my job. If you didn't get anything out of it, hey, I promise I'll do my best the next time to try to help you get something out of it. Again, I still haven't taken the course that I was working on for the Fib tool And trading options, I haven't taken those off the table. I'm still considering doing it. Right, I'm still considering doing it. So if you like the one I was talking about with the magical Fibonacci tool, that one there is going to come as like a bundle with, like, if you purchase, if I do it and then you purchase that, you're going to get access to the Smart Money Manuscript, because without the Smart Money Manuscript, the magical Fibonacci tool ain't gonna do you no good, right? Because you have to understand the ICT concepts to get what will be inside the magical Fibonacci tool. Okay. And then as far as the because people was talking about, you know, an options course, but I would need to do the options course like so that you can truly understand options, because the issue with trading options is not your strategy or your entry model, right? The ICT concepts is not going to make you a better options trader. The problem with options is that you don't understand options, right? And I learned that the hard way. I used to be an options trader, right? I got into the game trading options. I made a whole bunch of money trading options, and then I lost a whole bunch of money trading options, and then I started to learn about options, right? We all do it backwards, right? We think, hey, every asset is exactly the same, so I can just trade every asset the same without knowing the nuances. You got to know the nuances. So the options thing will be a standalone thing by itself, right? But what you learn, your strategies or your entry models or whatever, that aside. But with the magical Fibonacci tool, that's why you get access to the Smart Money Manuscript, because without understanding the ICT concepts, the magical Fibonacci tool is pointless, right? I haven't taken those off the tape. I'm still considering it, right? Still considering, because I don't be having time to be trying to, you know, promote stuff and try to sell stuff and try to do that right there. I do trading for a living, right? I do trading for a living, and I ain't got time to be, and I'm retired, and I ain't got time to be trying to do all this extra stuff. All right. I just peeked over at the chart. Price still going up toward that buy side liquidity over there. Order flow is still respecting bullish order flow. All right, man. That's it. Gang. I'll see y'all Monday for the pre-market analysis inside the Discord. Everybody else, I'll see y'all Monday evening for the price action recap. The price action recap will be back Monday. Again, thank you for hanging out with me for Facilitation February. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo Espanol. Till the next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. Y'all be safe out here in these trading streets, man. Gone. Yeah.